Boom. All right, what's going on, you guys? It's Royce Jacob. Welcome back to the channel and welcome back to Waves Weekly. This is a video series I post every Sunday where we cover recent news and current events that I believe relate to the markets. Also, let you guys know what stocks I'm looking forward to next week and just kind of market talk overall, talking shop. All right, so as always, we'll go over each topic that we're going to be discussing and then we'll dive into each one individually afterwards. As you can see behind us, we have the SPY open, so pretty much just sums up the general equity markets. We'll take a look at that, and I want to talk to you guys about as you can see here, the SPY and almost all the markets, so all general markets, had a great week last week, ended Friday super strong. And I want to talk to you guys about kind of the catalyst for that, which was the jobs report. All right, so jobs report, better than expected for sure. But there was a catch, there was a caveat to that we will cover as well. So we'll cover that and just my thoughts on how that, my thoughts about the reality of how that will affect the market going forward. Okay, we'll go on to a video that kind of sums up everything I talk about as well that I want you guys to actually check out afterwards. Then we'll look at, again, some stocks that I'm looking forward to next week. Earnings are always a good place to start when you're looking at stocks to follow. And so we're going to look at 7 earnings reports to watch next week, and I'll give you guys my thoughts on some of the companies releasing earnings next week. Earnings are coming to a close in the coming weeks, or slowing down significantly, I should say, as far as big companies, significant companies are concerned. So we'll take a look at these, and then we'll go over a few stocks that IPO'd. So Zoom Info, and then Vecto IQ's merger with Nikola, which was a pretty big deal. I have briefly mentioned of Vecto IQ. I always called it Vector IQ, but I guess it's called Vecto IQ. So yeah, we'll talk about that merger a little bit, and we'll talk about Nikola, because I think that's an exciting company as well, and stock. We'll then go on to talk about good old Bitcoin. You guys know I can't make one of these without talking about Bitcoin at least a little bit. So we'll talk about Bloomberg write-up that actually their kind of analytics investment side. I don't know exactly what's called, but it's kind of their investment arm of Bloomberg wrote up a report on Bitcoin, and it was very bullish. So I'll give you guys a quick rundown of that. It's not the report itself, but it's a report on the report. All right, so we'll look over that, and then we'll go over good old content of the week. All right, so this is a podcast that really helped me out over the past few years. Actually, I still listen to it. It helped me out a lot in the earlier years of my trading career, as you could say. So I'll give you guys just some insight on that and let you guys know what that is. If you couldn't see it right there, it's Chat with Traders, but I'll talk about it more at the end. Okay, so before we get into it, before we dive into each one one by one, as always, if you guys do go on to gain value from this video, I would really appreciate it if you gave it a like and subscribed if you are new around here. Okay, so again, SPY, Dow Jones, NASDAQ, I don't have it on here, but everything was up around 3% on Friday, up significantly on the week. So as you can see here, it had a great week last week, pretty much all green across the board, except for Thursday was down a little bit, but definitely a green week across all equity markets. And that is because of, actually, this isn't the only catalyst. There was kind of the airlines report, things are opening back up. That's the jobs report does reflect that. If you guys didn't watch my the video I made on the travel stocks that I posted yesterday, you guys can go check that out, because I did sum up a lot of my thoughts about the travel industry, which was another catalyst on top of the jobs report that did cause the market to have a very green day yesterday and green week. So check that out if you didn't. But this is the jobs report. Okay, so this was definitely a factor, a very large factor, for sure the driving factor. Yesterday, at least on Friday, because that's when the jobs report came out. So I'm going to read, this is a Wall Street Journal article, New York Times article, titled "What to Make of the Rebound in U.S. Jobs Report." Many of the gains came to restaurant work as 2.5 million jobs were added in May, and the unemployment rate fell to 13.3%. All right, so again, there was a caveat. We'll look at a little error that was made after this, but I just want to read you guys this real quick. All right, so the job market halted its pandemic-induced collapse in May as employers brought back millions of workers and unemployment rate unexpectedly declined. This is the important part. So tens of millions are still out of work, and the unemployment rate, which fell to 13.3% from 14.7% in April, remains worse than in any previous post-war recession. The rate would have been higher had it not been for data collection issues. Okay, so this guy kind of briefly touched on that, which we'll look at here. A misclassification error made the May unemployment rate look better than it is. Here's what happens. When the U.S. government's official jobs report for May came out on Friday, it included a note at the bottom saying there had been a major error indicating that the unemployment rate likely should be higher than the widely reported 13.3%. It goes. I'm not going to get into the semantics of this. You guys can watch it, look it up for yourself if you want to read this whole thing. This is a Washington Post article. But to sum it up, meaning the unemployment rate would be about 16.3% for May, but that would still be an improvement from the unemployment rate of about 19.7% in April, applying the same standards. All right, so I don't know. There's kind of a this guy said 14.7% in April and 19.7% for April, says the Washington Post. To be completely honest, I don't know which one of those is correct. That said, it is better than it was in April. It was better than a lot of analysts expected. A lot of analysts expected more jobs to actually start coming back next month in July. So this is better than expected. Still bad, though. The most important part, again, is that, we're still looking at 13.3%, which remains worse than in any previous post-war recession. All right, so post-war recession sounds very bad, and that's a good way to relate what's going on now as far as unemployment is concerned. Okay, so unemployment is still staggeringly high, and stock market's on fire. All right, the stock market loves high unemployment numbers, as you can see here. But that's kind of just to sum it up. The reason the stock market and the equity market the economy and the stock market are different is because they're like, even though so many people lost jobs, and I'm gonna kind of butcher this, but I want you guys to watch this video because this sums up my thoughts on this subject way better than I can. But I want you guys to watch this CNBC video if you want to, of course. It was just uploaded today. It's called "Why the Stock Market is Up with 42 Million Americans Out of Work." So this is a very thoughtful piece. It's only 10 minutes long, so it's definitely worth a watch, and it sums up the reality of why the stock market and why the economy are different. Okay, so again, like, the Fed is printing trillions of dollars. They're giving a lot of money to hedge funds to keep this market propped up. A lot of people want exposure to equities right now. By people, I mean like large funds, and even like other countries are investing into the U.S. market because it's stronger than any other market in the world right now. So it does make sense. A lot of people are unemployed, yes, but a lot of people who are unemployed are getting cash. Still, again, a lot of the public companies, the bigger companies like Apple, Adobe, like, although I say Adobe is not a huge company, but that's one of the stocks in the report we're going to look at, so that's why I said it. But a lot of just companies out there aren't directly as affected by this just yet, at least. Okay, so again, it makes sense. There's so much money being printed. I think that's from a ground level my thesis and the primary factor. There's a lot of factors coming into play, like anything else in the markets, but my primary thesis as to why the market is so much different than the economy is because trillions of the dollars that have been printed are going to these large funds and equity funds who literally pump that money into the market to keep it propped up. I don't think that can last forever. I've said that many times before. I won't reiterate that point again. But I don't think that the Fed and just the unlimited money printing can keep the markets up forever. I'm still very hesitant on the reopening of our economy, just because it's like I want to stay optimistic. I do want to stay rationally optimistic, though. I'll believe all the hype when I actually see the numbers. That's something I was talking about in the video yesterday, or on Saturday. Friday. Sorry. Just in regards to airlines opening up, a lot of people are making a lot of promises and a lot of claims, but like I said with the airlines, like, once you can say all you want, but I'm not gonna touch airlines until I see people, or I shouldn't say not touch them. I'm not going to be bullish long-term on airlines until I see those seats actually filling back up, okay? I don't care if you guys are taking reservations for 50%. I want to see actually 50% of planes full, all right? Which isn't crazy. But again, if it's not going to be back up to 100%, I almost guarantee that. Again, I could be wrong, but that is my thought on it. So we'll wrap that up there. Let's get into some of these stocks that I'm looking into next week, okay? So Markets Insider article, 7 earnings reports to watch next week. We'll just go down to the big ones. So Stitch Fix, Brown-Forman, Five Below, GameStop, Chewy, Adobe, and Lululemon, my least favorite stock in the market right now, probably. I like Lululemon as a brand. I think it's a solid brand. I think it's a little overhyped, to be honest. but I think that it is the single most overvalued stock in the market. So save the best for last in that sense. Save the worst of the best of the worst for last. All right, so we'll just scroll down here because this article gives a really nice little rundown of each company that is reporting. So Brown-Forman, alcohol stocks like Brown-Forman, best known as the maker of Jack Daniels, mostly haven't recovered from their losses. So this applies to all sectors, like the airline sector, like we just saw on Friday, just pop off. Everything moves in sectors for the most part, okay, which makes sense. Like obviously there are many companies, many different. There are many companies with different specialties in different sectors. And Brown-Forman, I honestly haven't even heard of this company before, but Brown-Forman, it's like Constellation Brands, it's like Anheuser-Busch, so Molson Coors. It's a drink, it's a consumption alcoholic beverage brand. So this is important in terms, pretty much what this guy says in this is just that it will have an impact on the rest of the market in that sector. Okay, so keep that in mind when we talk about these. It's not necessarily the specific company or the stock that's important, but it's how that information and how that earnings report will affect the sector as a whole. Okay, so that's kind of the important thing that I want to, the important point that I want to get across when I talk about these earnings plays. Okay, so again, this will be interesting. This is on Tuesday, June 9th, before market open. So if you guys are invested in Coors or Constellation Brands or anything of that matter, then keep an eye on that for sure. Five Below, again, I live in Hawaii. I have no idea what this is. You know what? I'm not even going to talk about that, but it looks like it's obviously a brick and mortar store. Hot stuff, cool prices. I assume it's kind of like a Dollar General-ish kind of vibe. So that just shows kind of general consumer sentiment around brick and mortar. So keep an eye on that. That is Tuesday, June 9th, after market. GameStop. It is crazy to me how GameStop is still alive. Barely. I mean, they're only worth a few $100 million at this point, but it's crazy how they're dinosaurs. Like they have not adapted not even the future anymore. It's the present of gaming and esports. Okay, so GameStop has done a terrible job at innovation. They announced earnings Tuesday, June 9th. They have, GameStop, when I say they haven't innovated, I mean, I've never seen an ad or even been on GameStop's website. Like where's their e-commerce portion? I know they have one. There's no way that they don't have one. I haven't checked, honestly. But, they haven't pushed hard enough, if anything. And they have so much brick and mortar. They've been closed forever. Not forever, but you know what I mean, over the past couple months through the pandemic. So I can't imagine with all the overhead that GameStop has and just their lack of innovation that their earnings will suck. I think GameStop will go bankrupt probably by the end of the year, to be completely honest. So we'll see about that. But again, if you are interested in trading GameStop at all or invested, I would be very cautious if I were you and I were invested. But they announced earnings on June 9th as well, on Tuesday after market. All right, last, Chewy. Okay, so this is like a pets.com kind of thing. They report earnings Tuesday, June 9th after market. Chewy stock has rallied 35% since the company's fiscal fourth quarter release in early April, firmly established the company's as a stay-at-home beneficiary. That includes a 70% gain in just the last 6 trading days. Okay, so that is interesting. I actually haven't looked at Chewy stock. But that's just another good look. It makes sense. A lot of people are home. They're probably spending more money on their pets. Their pets are their children, and that becomes even more so when you're stuck at home with them. So it makes sense that a pet-based e-commerce, not e-commerce, but I don't know if they're e-commerce. I have to assume they have. Actually, it looks like it is e-commerce. So that's brilliant. I think this is a solid company. I'm not gonna invest in it, but it'll be interesting. It's always just interesting to see what certain sectors are doing. Okay, Adobe. All right, remember I mentioned that earlier. It's because I read this prior to saying that. So Adobe, huge company, huge video production, everything production. I would call them like a digital production company. I use pretty much every Adobe product. I do pay $50 a month a subscription. So I'm a good test case study for people who use Adobe. Any creator uses Adobe. And a lot of people are probably paying that $50 a month for access to all the apps, which is a crazy monthly fee. Again, their products, though, are great. I've been paying that for the past, probably 4 years now, which is crazy. So they have taken so much money from me. Again, they do provide a great product. I'm a huge fan of Adobe's products. Used them forever. use them every day, literally. And with people on quarantine during this pandemic, a lot of people are getting more creative. They're getting more, like, for the same reason Shopify has thrived during the corona economy. I think Adobe has been thriving in this economy as well. So I expect big things from Adobe. Again, they are probably scratching around their all-time highs, if not just this past week exceeding all-time highs. I didn't actually take a look at it at the stock as of yesterday, but they're around. Oh wait, we can. Oh no, never mind. Sorry about that. I thought we could see it right here because I saw Chewy, but never mind. That said, just keep an eye on Adobe. Adobe announces earnings. Where does it say where they announce earnings? I mean, it's sometime next week. Okay, right there. June 11th on Thursday after market close. Okay, so that'll be interesting to me. I'll definitely keep an eye on that one. Again, Adobe, great company. I expect them definitely impressing on earnings. I will have to. I'll give a follow up on that later this week as it nears closer, and I'll actually look at the stock. Okay, so last but not least, again, best of the worst for last. Lululemon Athletica. All right, so Lululemon. I actually just want to, we'll look at Adobe and Lululemon right now, okay? So Adobe, because I'm actually curious about what it looks like right now. So Adobe. Yeah, okay, that's almost exactly what I expected it doing. Okay, so it's already past previous all-time highs. That worries me. I won't be investing in it, although I do believe in the company as a whole. What's the market cap at? Like. Okay, so 190 billion. That's obviously extremely high, but Adobe is such a force to be reckoned with in the production space, and just everything. Again, everything's trending digital. Adobe's a freaking great company. They have zero overhead because it's all SaaS, software as a service product. So Adobe's a great company. I won't be. Again, it is exceeded its previous highs. I'm skeptical in this economy of anything that has exceeded its previous highs, although I just talked about the market and the economy being different. It still sketches me out. So I won't be trading this. I won't be touching this. Again, big fan of Adobe, though. That said, let's look at... What were we going to look at? Oh, yeah, duh. Okay, so Lululemon. You guys got to look at this. I'm already watching Lulu. I don't know why I added there. But... look at that. Look how far beyond previous highs Lululemon is, okay? And the primary reason for this is because there's so many people out there who think Zoom calls, athleisure is going to be the next revolution of clothing, which I don't doubt. I think athleisure was already trending up regardless of this, and this kind of just like with a lot of other industries kind of expedited the process of athleisure gaining steam and gaining traction. But there is no chance that Lululemon, that the growth in Lululemon is like justifiable. Like this growth, like look how much. Okay, so their previous all-time high in February of this year, they reached an all-time high of $260. They're now sitting at $320. All right, so and a market cap of 41 billion. All right, so that's insane when you look at it. Look at this. In October of 2017, they were at $60. They've since 5x. So I just don't. I'm personally shorting Lululemon. Like, I'm straight up shorting the stock prior to earnings. I think that they will disappoint significantly more than almost any of the earnings we've seen to date. Again, I could be very wrong, but I just don't see. I don't get it. And they are saying like, oh, online sales are up X amount of percent, like a significant percent. Well, obviously, because all of your stores are closed. So if people want any of your stuff, they have to buy online. But overall sales are significantly down. Like that's what I don't get. I don't get how people don't get that. So although online sales are way up, overall sales are still down, just to like straight up common sense. So I'll stop harping on Lulu. Again, I'm personally shorting the stock if you guys want to know. And this is way overvalued. So I'm very excited for their earnings to come up. So I can either be super right and have been right for the past couple months, or be super wrong, and if I am wrong, I'll be upset, but I will take the L, as you have to do. If you're wrong sometimes, just take the L, just accept it. All right, so we'll then talk about a couple stocks that IPO that are exciting. So Zoom Info, the name Zoom is hot, A lot of people are just squeezing the name Zoom into their company name. I'm just kidding. This company was probably had Zoom in its name way prior to Zoom popping off. But anyway, Zoom info price, IPO at $21 per share on Wednesday after raising the range to between $19 and $20. The tech IPO market has been dormant since the coronavirus started shutting down wide swaths of the economy in March. Zoom info uses artificial intelligence to process data that aids corporate sales and marketing teams with customer outreach. Okay, so in this current market, I'm actually very bullish on stocks that have just IPO'd. It's a super bold move for a stock to IPO right now, just because the economy is so insanely bad right now that it is bold for a stock to IPO. But at the same like, again, I know we talked about the economy and the market being different. They are still obviously, they aren't attached to the hip, but they're definitely like cousins. You know, they're definitely related, but they're definitely acting not in synchrony right now. Okay, so it is a bold play, but I get what they did, and I'm actually bullish on stocks that have just IPO'd in this market right now because it's so irrational and so ridiculous that you want these culty stocks and you want these like super shiny object new stocks in your portfolio, because I think they definitely have the potential to pop off, just again because there's so much money floating around, so much irrational, uneducated money floating around, that I really like shiny objects. That's kind of to sum it up. So that's the same reason I really like this stock. Again, okay, so Vecto IQ, this is a very hot stock over the past month. I did have a few calls on it a while back right before it popped, which I was super stoked on. I got out early. It ended up popping way more, so I didn't I profited big. I was stoked. I'm grateful for those profits, but I definitely could have ridden it further. I didn't know, though. That's the game. But I did profit on this, and it was on the rumor that they were merging with Nikola Motors. Okay, so Nikola Motor, Tesla competitor. I think I will make a video, because I'm actually the more I looked over the stock this weekend, the more bullish I get on it. Or the company, I should say. Obviously, the stock and the company, same thing. But the company, the more I look into the company and the kind of the financials and whatnot of this company, I'm very, very bullish on it. Nikola, like Tesla, like NIO, some of these other electric car companies, they're culty. These are cult companies, these are cult stocks, I should say. Like, if you look at some of the videos on YouTube about Tesla stock, like, there's so many Tesla moon boys out there. It's insane. So I love culty stocks because that means that they have the potential, especially like fairly low market cap. I think Nikola's sitting at like, does it say they're, I can't find, I thought I would have been able to find the market cap here, but not yet. We'll look at it. I'll make a full video on Nikola, just because, again, I'm so bullish on culty stocks in this irrational market. So we'll make a video in the near future about Nikola stock, because, again, I do see big things in the near future for this stock. And, again, IPO'd. Both of these companies, honestly, you could find any company that's just IPO'd. It'll probably pop up, attract some new uneducated, irrational investors as a shiny object, and it'll pop it off. And there is always potential to profit, obviously, when stocks are popping off and when they have lower market caps like these two companies. Okay, so the last story we'll cover, again, can't not talk about Bitcoin. Bloomberg Bitcoin will approach record high of about $20,000 this year. All right, so again, this is kind of the investment analysis-y arm of Bloomberg that reported. They actually made a report on Bitcoin a few months ago that I ended up talking about in a previous episode of Waves Weekly, I think, or a Bitcoin video I made. I can't remember, but I did talk about it before. And they actually released another one, kind of double downing on their bullishness of Bitcoin. Okay, so again, Bloomberg, very reputable, very well respected publication company. It's a big deal when a company like Bloomberg is so bullish on Bitcoin. Okay, and this is their second report in only a few months, or like a couple months at that. Time is going so fast, but it's their second report in only a couple months. It's very bullish on Bitcoin, obviously. So this is what they said. This is what I want to cover specifically right now, because this is what's important to me. So COVID-19 and institutions helping Bitcoin. The report suggests that COVID-19 has accelerated Bitcoin's maturation as an asset, showing its strength amid declining equities. In addition, it points to ever-increasing appetite for institutional investors in Grayscale, or GBTC, which is pretty much a Bitcoin stock, in particular, which has been consuming about 25% of the new supply. So far this year, its increasing assets under management has consumed about 25% of new Bitcoin mined versus less than 10% in 2019. A graphic depicts the rapidly rising 30-day average of GBTC assets under management, near 340,000 Bitcoin equivalents, about 2% of the total supply. About 2 years ago, it accounted for 1%. Okay, so GBTC Grayscale Bitcoin is a Bitcoin trust. That is one of my favorite stocks. It's when you invest in Grayscale, you're investing in Bitcoin. I'm actually more bullish on Grayscale than I am on Bitcoin itself, because again, if hedge funds if large equity funds want exposure to Bitcoin, they have to do it through a trust like Grayscale. So that they don't have to do it, but it's way easier for them to do it that way. And there's less legal ramifications and hoops they have to jump through. Okay, so I'm very bullish on GBTC. I will make a video on GBTC specifically in the future. I'm gonna wait for Bitcoin to pop off, to be honest. But GBTC has been doing very well. If you guys aren't familiar with it, I would highly recommend looking into it. But again, where was it? BTC to 20K or 28K. So the report says something needs to go really wrong for Bitcoin to not increase in value. Then it states that it will approach the 2017 high of $20,000 and may even reach a new high of $28,000. Last year, the high was about $14,000, which would translate into almost double in 2020 if rotating within the recent band and mean little in the big picture. All right, so I'll let you guys read this whole thing if you guys want to. I did cover a lot of it, but it is a Cointelegraph article, and you know what to look up. So again, you guys know I'm bullish on Bitcoin. There are so many reasons that Bitcoin should flourish right now, and it is also very promising that it has acted as a hedge. So Bitcoin is an uncorrelated asset for the far majority of the time, aside from the liquidity crisis that we saw in March, okay, when everything tanked, even gold. All right, so Bitcoin is not correlated to any other asset. It's not directly, at least. There is slight correlations, but it is less correlated to any other asset than any other asset out there, if that makes sense to you guys. But the reason that's important is in a very sketchy market, which I would say the current market is objectively very sketchy and very irrational. In a market like that, and along with the government, the U.S., literally every government in the world printing trillions of dollars in their own fiat currencies, Bitcoin has such a place as just a absolutely scarce asset in times that are so volatile and uncertain as these. Okay, so you guys know I like Bitcoin. I'll let you guys look into this for yourself. Again, I will make a video in the future on GBTC, so stay tuned for that if you want that, because again, I'm super bullish on GBTC as a stock, and ETHE. That stock has been on fire, up like 50% last week. I think it's crazy. All right, so we'll close. I've been rambling on for a long time now. This is a long one, but content, chat with traders. This is a great podcast. Again, I've listened to this for the past few years. There's a lot of great info in it. I don't listen to it as much anymore. I do still listen to some episodes, but I would highly recommend checking out this podcast. It's hosted by this guy, Aaron Fifield. He's an Australian dude. Cool dude, very chill, very easy to listen to. But actually, the most recent episode they posted, that he posted just a couple days ago, is a series he's doing where he interviews traders who have just like finished their first year trading full time. And there's just a lot and I think he has 3 episodes like that. I would highly recommend checking those out just because it's cool, especially if you're newer to the game. Understanding how, if you are taking trading seriously, or even if not, there's always good lessons to learn from people who are actually out in the field doing this for a profession. So go check that out if you want. Again, it's a good podcast if you are in this game. So yeah, check that out if so. And we'll wrap it up there. All right, you guys, I appreciate you guys watching. If you want to talk about anything that we covered here, or any stocks you're excited about next week, anything at all, the usual, drop it in a comment down below. Always love talking with you guys. Always love learning from you guys. As always, check out the links in the description if you want to help me help you. Really appreciate it if you do. If not, no worries. And again, I'll see you guys next week. So very exciting week coming up. I'm stoked to talk to you guys soon. All right, so always remember, take action, make waves. Peace.